In today's market update, we're going to be discussing the likelihood that a 40-week cycle trough has formed in the US markets. We're going to be looking at our usual slate of instruments that we've been covering in recent months. We're also going to take a very quick look at the Indian Nifty. But before we take a look at the markets today, I wanted to share with you an exciting update. Unless you've been living under a rock for the past few months, you will know that we have been releasing our Sentient FLD indicator for various trading platforms. We have released the indicator for the MT4 platform and also for the NinjaTrader 8 platform. We are in the final days of development on the Tradingview version of the Sentient FLD indicator. What this indicator does is it works on your trading platform and it provides you with a Hurst cycles analysis and an interpretation of the sequence of interactions between price and the FLD. This information is extremely valuable to you if you are trading with Hurst cycles. The reason that this is an exciting update is that this is a screenshot from my mobile phone this morning. Here you can see the alert came from Tradingview. I snapped the screenshot 25 minutes after the alert came through. The alert was for the SPX 500. It came from a 60-minute chart. That's what that number 60 means over there. A 60-minute chart or a 1-hour chart. And the low price touched the one-day FLD. Here we are expecting potential support in a C category interaction. It's an extraordinary thing because Tradingview was not running on any of my computers at the time. It wasn't running on my mobile device, and it demonstrates the reason that the Tradingview platform is so popular with over 60 million subscribers. I have been testing the alert feature in our Tradingview indicator, of course, and even though the Tradingview platform was not running on any of my computers, it was running on the Tradingview servers. And so those Tradingview servers, 24 hours a day, 7 days a week, are able to generate alerts for instruments that I am tracking. We are very close to launching the Tradingview version of the Sentient FLD indicator, so stay tuned for updates about that. Taking a look at the markets, this is the S&P 500 using SPX data, and this is one of the analyses that I presented in our previous market update video 2 weeks ago, suggesting the possibility that price was coming down into a 40-week cycle trough. You can see that that 40-week cycle trough has now been positioned in the analysis, and the reason for that is because of the way in which prices interacted with the cycle tools, the FLD and the VTL, as it has bounced out of that 40-week cycle trough. Just a quick reminder, you can of course go back and take a look at our previous market update video. We were considering two possibilities. The first possibility had an 80-day cycle trough over here, implying that price was going to come down into a 40-day cycle trough and then of course bounce out of that 40-day cycle trough, with the 40-week cycle trough still lying ahead of us. But I suggested this as an alternate possibility. It presents a slightly distorted cycle picture, as I discussed in the previous market update. Here we have what I describe as a distorted cycle, with the midpoint of the M shape dropping lower than both the starting and ending point of that M shape. This is not an invalid analysis. It is a slightly distorted cycle that we experienced running through the months of March, April and May, but it is certainly a very viable analysis, and as you can see, it helped us to identify the 40-week cycle trough that formed over here in the beginning of August. Let's zoom in and see how we were able to confirm the formation of that trough. In our previous market update, which I recorded over here on this day, on the 5th of August, I pointed out this very interesting interaction between price and the FLD, where price found resistance at the level of the FLD. If you are familiar with the sequence of interactions that we track between price and the FLD, you will know that we would then label this an F category interaction. This is a typical G and then H category interaction. That's not very neatly written. There we go. That interaction is the final interaction before a trough of at least 80-day magnitude. But as discussed in our previous market update video, if that was the case, then we were looking at the possibility of a 40-week cycle trough forming over here. As price bounced out of this price trough, we were still considering the possibility of it being a 40-day cycle trough or perhaps a bigger 40-week cycle trough. The confirmation of the magnitude of that trough came as price interacted with the FLDs. In particular, of course, for the time frame that we discuss generally in these videos, when price crossed above the 20-day FLD on Tuesday of last week. That provided us with a target which is just above 5,600. I think it's about 5,610 if memory serves me correctly, and so we have not yet quite reached that target. But now as price crossed above the 20-day FLD, that is what we would have expected following the formation of a small 40-day cycle trough or also a 40-week cycle trough. So why is it that we believe that this is the 40-week cycle trough as opposed to the 40-day cycle trough? Let's zoom back just a little to understand why that is. If this had been a 40-day cycle trough, then this, of course, over here would have been the 80-day cycle trough. I would encourage you to go back and take a look at previous market update videos to understand that situation. In that case, we had a 40-day cycle trough that had this kind of shape over here. That is a bearish cycle shape with an early peak and, of course, a much lower trough. Now, if this was a 40-day cycle trough that price was bouncing out of, we would have expected price to cross above the FLD, but we would have expected a more bearish cycle shape at this time. The reason for that is because the second 40-day cycle in an 80-day cycle, particularly one that is ending in a 40-week cycle trough, must, by necessity, be the most bearish of the two 40-day cycles. As price rose up steeply last week, we were able to confirm the fact that this was not merely a 40-day cycle trough, but it was the 40-week cycle trough that we discussed as a possibility in the previous market update video. So what are we expecting to happen now? This is our A category interaction between price and the 20-day FLD. We do expect price to reach up to the target, which, as I've mentioned, is about 5610. Then at the time that the 20-day cycle trough forms, we would expect the 20-day cycle FLD to provide support to price. The composite model line provides a graphic interpretation, if you like, of our expectation, with price rising up and forming a peak somewhere about here. It has been a little more bullish than expected from purely the cycle information, but here you can see price finding support at the level of the 20-day FLD as expected. The same possibility of the 40-week cycle trough forming in the Nasdaq was presented in the previous market update video, and here again you can see that the 40-week cycle trough has been confirmed in the analysis with the placement of these diamonds below that price trough. This is a slightly different take on the analysis because here you can see we have a 20-week cycle trough below this low price in the middle of April. That provides us with a very long 20-week cycle, as you can see, of 175 days, and then a very short 20-week cycle of 107 days. Neither of those are entirely impossible lengths for the 20-week cycle, and it avoids the situation of a distorted cycle as presented in the S&P 500. Is it possible that the 20-week cycle expands that much and then suddenly contracts? Yes, of course it is. When we calculate an average wavelength, it is just that. You will encounter longer wavelengths and shorter wavelengths. The result, of course, is that your average wavelength appears fairly constant, even though you will have stretched and compressed cycles. And so the same situation is true in the Nasdaq. We are expecting price to reach up to the target that has not yet quite been reached, and then at about the time that the 20-day cycle trough forms, we would expect the 20-day cycle FLD to provide support to price. In the Australian stock markets, ASX, I presented very much the same situation in our previous market update, with the possibility that a 40-day cycle trough was going to form, but I discussed again in this market the chances that this could also be the 40-week cycle trough that price was coming into. Here is the circle and whiskers for the 40-week cycle trough, and here is the very staggered nest of lows. I presented in our previous market update video another approach to working with your Hurst cycles analysis, where you don't actually require the analysis to be entirely correct on your chart, because all that you have to do is slide some of these diamonds over, if that makes sense. And so in this analysis, we had the possibility of a 40-day cycle trough forming, which might have been a 40-week cycle trough. If the 40-week cycle trough was forming, then all we would do is shift our circles and whiskers over to the 40-day cycle trough. You will notice that this analysis has not yet been updated by Sentient Trader, and the reason it has not yet been updated is because although the movement upwards from this trough does seem to have been strong enough to be a bounce out of a 40-week cycle trough, price has not yet presented us with an anomalous situation in terms of the cycle shapes. Let's quickly zoom in and understand how that is. Here is our 80-day cycle trough according to this analysis, and here is our 40-day cycle shape. Now, if the 40-week cycle trough still lies ahead of us, we would expect a less bullish or more bearish 40-day cycle to play out. So far, all we have seen is this much price action. There is no anomaly presented yet. If price forms a peak soon and then drops down lower, we will have indeed a more bearish or less bullish 40-day cycle, which means that the 40-week cycle trough lying ahead of us is still a possibility for the Australian market. However, we need to bear in mind the principle of commonality that tells us that markets around the world work with a great deal in common. And so if a 40-week cycle trough is formed in the US markets, the chances are good that the 40-week cycle trough has also formed in the Australian market. And so here too, we are looking at our target for the 20-day cycle FLD cross, which occurred a little later last week, only in fact on Friday. We would expect that target to be achieved, and then of course price will come down into the next 20-day cycle trough. If price finds support at this 20-day cycle FLD, then, just as is the case in the US markets, we would upgrade this trough to a 40-week cycle trough, and that would be our BC category interaction as price finds support at the level of the 20-day FLD. If, however, price crosses strongly down through this FLD, then we will leave this trough as a 40-day cycle trough. This would be our D category interaction, this would be our E category interaction, and this price cross down through the FLD will be the F category interaction. And so Australians need to stay on their toes to watch the interaction with that 20-day FLD. Bear in mind the principle of commonality. I would expect the 40-week cycle trough to have occurred at the same time as it did in the United States, in Australia. It has been many months since we last looked at the Indian Nifty 50. It is a much requested instrument, and I thought we would take a very quick look at it today. Something very interesting has been happening in the Nifty 50. You can see it straight away. The Nifty 50, according to this analysis, formed a 54-month cycle trough. That's a really important cycle trough in June of this year. How is that possible? It is possible because different markets around the world, even though they experience commonality, will have different analyses and different cycles beating in them. There is no clear evidence of a direct correlation between the Indian markets and the US markets. Certainly there is less of a correlation between the Indian and US markets as there is between the Australian and US markets, for instance. That probably has to do with the economic conditions in the countries, but that is a subject beyond the scope of this video. The important thing is that it seems likely that a 54-month cycle trough did form in June of this year in the Nifty 50. If we measure these cycles, you can see that we have a fairly good regular beating of the 18-month cycle, with two 18-month cycles coming in at 1,096 days. Or if I align my mouse a little bit better, 1,094 days. That means that the average length of those two 18-month cycles would have been 547 days. The average length of an 18-month cycle discovered by Hurst 50 years ago was 546 days. And so the Indian market would appear to be exhibiting some very clear 18-month cycles. We do, of course, have a similar distorted cycle that occurs over here at about the same time as it occurred in the US markets and other markets around the world. Now, it can be a little worrying applying a 54-month cycle magnitude to a trough that occurred only 2 months ago. Are we sure about that? We don't really need to be sure about it, depending, of course, on your trading time frame. If we zoom in, and let's hide these semicircles for now, we can focus on a time frame that we have more confidence in. And so let's hide these diamonds. We're not sure about the 54-month cycle trough, but I am certain that it is a trough of at least 80-day magnitude. So let's hide those longer diamonds. There we go. Now, regardless of where the 54-month cycle trough actually occurred, whether it occurred in June or whether it still lies ahead of us, we can consider the analysis from the 80-day cycle and shorter only. And so it is clear that an 80-day cycle trough formed over here at the beginning of June. An 80-day cycle trough for the next 80-day cycle trough also formed over here, probably at the beginning of August. That is in line with what we have seen in the US markets and also in the Australian market. What price is doing now is it is bouncing up out of an 80-day cycle trough, and there is the crossing point. Price has just about reached the target for that price cross over the 20-day FLD. What are we expecting next? Next must be a 20-day cycle trough where we would expect price to find support at the level of the 20-day FLD. Again, if price fails to find support at the level of the 20-day FLD, then we will have to reconsider our analysis in terms of the magnitude of this trough. In our previous market update, which was of course recorded over here on the 5th of August, when we looked at gold, I mentioned that it was likely to keep rising up into a second peak. There was the danger that we were going to get a symmetrical peak forming over here, but notice how price interacted with the 20-day FLD. Although this is a messy interaction or series of interactions over the first 4 days of this week here, you can see that price effectively found support at the level of that 20-day FLD. It has now continued up to the 80-day cycle peak. Nothing has changed in terms of what we are expecting next. An 80-day cycle trough should form in about the middle of September. When price next comes down to the 20-day FLD, we would expect it to cross down below the FLD in an F category interaction on its way down to the 80-day cycle trough. As it crosses that FLD, it will generate a target to the downside. The composite model line provides us with a very useful way of interpreting the cycle analysis. Here you can see the composite model line is expecting a peak in gold round about now. We are then expecting price to cross down below the 20-day FLD, travel down to its target generated as a result of crossing that FLD, and to form its 80-day cycle trough over here in about the middle of September. Finally, we have Bitcoin. There isn't very much to add to what I said 2 weeks ago when I discussed Bitcoin. We were considering the possibility that this 18-month cycle trough had indeed formed over here at the beginning of July, which meant that Bitcoin was coming down into a 40-day cycle trough. This was one of the analysis possibilities for the US market. Again, we have the principle of commonality that tells us that markets move together. But what is the relationship between between Bitcoin and the US stock markets? We're not entirely sure, and so although there is definitely some commonality, the fact that a 40-week cycle trough formed in the US stock markets doesn't mean that we are expecting a 40-week cycle trough to form in Bitcoin, which is likely governed by different cycles beating with a different rhythm. The possibility discussed in the previous market update was that the 18-month cycle trough did form over here and that we were expecting a 40-day cycle trough over here. The alternate was that the 18-month cycle trough should be moved later, but you can see that that has not happened. Why is that? Because as price bounced out of this potential 40-day cycle trough on the 5th of August, you can see that it reached up to the 20-day FLD, where it significantly failed to get across that FLD, unlike the US markets and the Australian market and even the Nifty. Price did not cross above the 20-day FLD in what would be expected to be an A category cross. This looks like a much weaker situation, I'm sure you will agree. Our sequence of interactions here then is an A category interaction here for this price cross. The B and C category interactions around the time of the 20-day cycle trough cannot really be identified. We might want to mark them there, but there is no clear interaction with the FLD itself. This here is the D category interaction as price crossed down towards the 40-day cycle trough. This then should be the E category interaction. Now that is a rather miserably bearish E category interaction, I'm sure you will agree. Price found resistance at the level of the FLD. It struggled to get across it. It did indeed get across it, but it only succeeded in doing so on Thursday or Friday of last week. We are next expecting an F category interaction, and of course it is possible that is happening now, although this might just be an example of the price tapping the FLD following an E category interaction, something we often see. The important thing is that according to this analysis, we are still expecting an 80-day cycle trough to form in the middle of September. And so here we have some commonality, it would seem, between gold and Bitcoin. Bitcoin and gold are both expecting troughs of 80-day magnitude in about the second week of September. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Discord server. I look forward to hearing from you.